There's a moment in every trader's life when the screen seems to breathe. Candles flicker like distant lighthouses, and a single tick, wandering out of noise, looks suddenly like fate. Your heart accelerates. Time narrows. You reach for the buy or the sell, and the finger hovers over a button that has always disguised itself as choice, but is really an answer to a question you barely know how to ask. Is this the perfect moment? The chart has been a faithful liar, offering signals, then snatching them back, painting the past with certainty while the future hides behind the next 5 seconds. But tonight the question shifts. Not will it go up, not will it break, but a deeper riddle. Could looking through more than one window at once, aligning long tides with short ripples, reveal a seam in time where entry becomes almost inevitable and exit almost clean? The market is a coastline. Measure it with a yard, it is jagged, with a mile, smooth. Each scale tells a different truth. Somewhere between the mile and the yard is a harmony. Somewhere between the month and the minute lives the rumor of perfection. In the minutes to come, we will walk that coastline with instruments that listen to tides and pebbles alike. We'll watch how the brain stitches slow context to fast detail, and ask what happens when charts do the same. We'll hold a candle close enough to see its texture, then step back until the pattern emerges. We'll face the frustrating music of conflicting signals and learn to wait for a chorus. We'll stand at the gate where exits are chosen and see how the mind bargains with the heart. And then, at the quiet apex, we'll discover the golden insight that perfection does not live at a price level, but at a frequency. A synchronization between your chosen time frame and your breathing. This is not a tutorial. It is a pilgrimage into the mystery of multi-time frame analysis and the longing for a perfect entry and exit that somehow does not break us in the pursuit. The market is an ocean, and multi-time frame analysis is the act of owning both a telescope and a microscope. On the higher chart, you witness tides, slow planetary pushes of capital, macro mood, liquidity migrating like whales. It is there that structure appears, trend lines that hold for seasons, moving averages that behave like climate. Drop suddenly into the lower chart, and you discover weather, gusts and gusts, squalls of news, the micro-breath of order flow. Fractal theory tells us these worlds are not separate but similar, self-similarity nested in a lattice of 1/f noise where patterns echo at different scales. Yet perception is treacherous. At the granular level, what looks like reversal can be a mere wavelet dissolving into a larger tide. At the macro level, what looks like persistence can conceal 1,000 ambushes underneath. The coastline paradox asks, how long is the shore? It depends on the ruler. So too with markets. We build rulers out of time and then confuse the measurement with the thing measured. The mystery is this: if each time frame is a fragment of truth, can their alignment become more truthful than any one of them alone? Your nervous system, it turns out, is already multi-time framed. It carries slow rhythms and fast sparks, and survival requires them to sing together. In the brain, slow waves like theta and alpha set context, an undercurrent of expectation and mood, while faster gamma bursts paint edges and decisions. Neuroscientists call it cross-frequency coupling, a dance where the phase of the slow rhythm gates the amplitude of the fast. Translated into a trader's language, the higher time frame is the slow rhythm, the bias, the macro prior, the sense that up or down has a gravitational lean. The lower time frame is the fast spark, the entry trigger, the immediate microstructure that opens and closes doors. Predictive coding suggests that the brain thrives when priors and prediction errors negotiate cleanly. So too the chart. The higher time frame offers the prior. The lower time frame offers the error signal that says, now. When the fast aligns with the slow, when the micro confirms the macro, the system phase locks. This is the rumor of perfection, not prophecy, but synchronization. The speculation grows. Could a human, tuned like a cortex, learn to hear when the weekly trend inhales and the 5-minute chart exhales precisely in the same direction? But the market is also an orchestra without a conductor. Signals clash. The hour whispers by, the minute screams sell. Your pulse climbs a ladder. Conflicting frames create cognitive dissonance, a tension the mind resolves by choosing the time frame that flatters the desire already in motion. Statistics has a cruelty here. Aliasing, where sampling a signal at the wrong pace invents patterns that do not exist. Simpson's paradox, where trends reverse when data is aggregated differently. Markets wear these paradoxes like jewelry. An uptrend across months can hold a downtrend across days. The reconciliation lives not in which is true, but in the period you mean to inhabit. Multi-time frame analysis does not eliminate contradiction. It reveals it, then asks for coherence. Coherence means that your chosen higher time frame defines the climate, your middle time frame defines the weather, and your lower time frame hears the gust that fills the sail. You wait for windows where the faster chart is not fighting the slower, but riding it, a spectral alignment, a chorus in tune. Science whispers that coherent systems transmit information more efficiently. Noise cancels, signal survives. The art is not in spotting a candle pattern, but in refusing to hear it until the orchestra agrees on the key. And what is the ritual of agreement? The psychology of entry and exit is a ritual of anchoring, triggering, and releasing written across time. Anchor first. Choose the slow chart that will be your gravity, the weekly or daily that tells you, with patience, what the river wants. This choice is not technical, it is existential. It is the tempo of your life, the breath length of your attention. Trigger. Second, wait in the faster chart for the local pattern that matches the distant tide. Pull back into structure, break and retest, momentum reclaim. This is the synapse firing when the neuron is primed. Release. Third, define the exit in a time frame that sits between, close enough to adjust, far enough to speak like a judge, not a gossip. Neuroscience calls this if-then planning implementation intentions that reduce cognitive load under stress. Physiology adds a warning. Dopamine is the molecule of next, and it will keep you searching for a better entry even when the right one has arrived. Cortisol will raise doubts when the exit demands conviction. Your ritual becomes armor. You breathe at the speed of your time frame. You act only when the slow map and the fast street align beneath your feet. You depart always with a pre-agreed door. Yet the exit remains the paradox's razor. Traders worship entry, but prophet is a wanderer who leaves not when invited, but when the house changes weather. Prospect theory tells us that the mind suffers losses more than it enjoys gains. The disposition effect traps us, cutting winners too early and holding losers too long. On the lower chart, noise grabs your sleeve. On the higher chart, trend seduces you into staying for one more song. Multi-timeframe exits ask for a geometry of patience. Picture a bridge of structures. Higher time frame swing levels where herds leave footprints, mid-time frame moving averages that act like drift, lower time frame momentum that signals exhaustion. Effective exits respect the scale of the entry and the ambition of the anchor. If you enter on a 5-minute signal to serve a daily trend, expect lower time pullbacks to be weather, not war. If the daily breaks its structure, the climate has changed. Leave even if the minute begs for one more breath. Volatility, measured across scales, changes the story's cadence. What the average true range implies on a daily can make a lower time pullback feel like an earthquake. Your nervous system will want to collapse time to save pride. Your ritual will insist you expand it to preserve truth. Once, on a quiet Tuesday, you will watch a multi-time frame alignment arrive like morning. The weekly holds an uptrend that is old but not tired. The daily has pulled back into a pocket where previous selling ran out of breath. The 1 hour draws a shallow flag, then a false break lower that fails to pull the daily with it. The 5-minute shows buyers stepping in, not with fireworks, but with a steadiness that seems to answer an invisible call. It will feel like déjà vu, not because you have seen this exact arrangement, but because your nervous system recognizes the choreography of scales. You will enter on the fast chart, in service of the slow. The trade will breathe. Later, the hour will accelerate, and you will know your first scale-out belongs here because your exit lives where the mid speaks. You will not crave the top tick. You will collect your risk and let the remainder rise with the tide that hired you. And when the daily finally stumbles, you will leave, not because price pleads, but because your anchor has let go. There will be a quiet in that exit, the silence of a plan returning to its original size. At the peak of this journey, the golden insight arrives with the softness of truth. Perfect entry and exit do not exist as coordinates. They exist as resonance. The market is multi-scale, and so are you. Perfection, as a trader, is not catching the first domino or the last. It is acting at the intersection where your chosen slow rhythm and your chosen fast signal move in phase, and where your exit honors both. When your higher time frame defines the why, your lower time frame delivers the when, and your middle time frame governs the how. The idea of perfect shifts from a tick to a timing, from a boast to a behavior. You tune yourself to a frequency rather than chase a spot. And in that tuning, uncertainty does not vanish. It becomes music. You stop praying for miracles and start listening for coherence. If this film found you at a screen waiting for a candle to justify your hope, come closer. Tell us in the comments the time frames that match your life's tempo, the rituals that steady your breath when the market's voice grows loud. If these minutes gave you a new way to hear the charts, more orchestra than alarm, tap-like, share this with a trader who's chasing ticks and subscribe. We will keep exploring the psychology of profit and the science of patience, one scale at a time, one breath at a time. Trade the rhythm, not the candle. The ocean is made of waves, and so are you. Perfection is not a point on the chart. It is the moment your courage and your time frame keep time together, and you move.